If this video is making your trading journey clearer and helping you become a better version of yourself, then show some solid support. Hit subscribe and stay with us as we grow together every day. Human analysis, the chapter most traders never open, yet it decides everything. The chart you see on the screen is not the real battlefield. It is only the reflection. The true battlefield lives inside the trader, inside the heartbeat, inside the fear, inside the impulse that destroys months of discipline in a single moment. Every candle on the chart is nothing but a mirror of human nature. And Charles Dow understood that before any modern psychologist ever spoke the word behavior. Charles Dow never said that markets move because of numbers. Markets move because of people who are ruled by emotions they barely understand. People coming with hopes bigger than logic, fears deeper than facts, and expectations louder than truth. And if you want success in trading, you must study humans even more than you study candlesticks. This is human analysis, the hidden knowledge that turns an ordinary trader into a master. Look around. The trader who loses is not defeated because his strategy was wrong. He is defeated because he misunderstood his own mind. He is defeated because he could not understand the crowd he was trading against. And Dow knew this. Dow knew that the market does not rise because of price. It rises because millions of minds reach a specific emotional temperature at the same moment, the temperature of confidence, and it falls the same way when fear becomes louder than logic, when the human engine collapses under its own doubts. You can read every technical book in the world, but if you cannot read human emotion, you will still trade in the dark. The first rule of human analysis begins right here. The market is a giant psychological organism. It breeds hope. It exhales fear. It moves with greed, ambition, uncertainty, envy, impatience, ego, pride, and panic. Every candle is an emotion. Every trend is a story. Every reversal is a realization. Every consolidation is confusion. And when you learn to read humans, you learn to read markets. Dow said that a trend is not confirmed until both averages agree. But here's the part nobody talks about. Your internal averages must confirm too. Your emotions and your logic must agree. Your plan and your mindset must agree. Your risk and your tolerance must agree. Your ambition and your patience must agree. This is the hidden confirmation that creates true trading success. The internal Dow theory. Because the greatest contradiction happens not on the chart but in the mind of the trader. One part says hold, another part says exit. One part says trust the analysis. Another part says, what if the market turns? And this inner disagreement destroys more traders than market volatility ever could. Human analysis teaches you to remove that contradiction, to unify yourself, to control yourself before you try to control your trades. Dow studied markets for a lifetime, but what he was really studying was the soul of the market, and the soul of the market is collective human behavior. Now let us dig deeper into the layers of human analysis. Layer 1. The individual trader mind. Inside every trader lives two characters, the analyzer and the dreamer. The analyzer wants logic, the dreamer wants profits. The analyzer sees risk, the dreamer sees possibilities. Human analysis is the art of making the analyzer stronger than the dreamer. Because the dreamer trades big, the analyzer trades smart. The dreamer imagines quick wealth. The analyzer sees slow, steady progress. The dreamer breaks rules. The analyzer protects capital. Every loss begins when the dreamer becomes louder. Every success begins when the analyzer becomes the leader. The market does not punish bad luck. The market punishes emotional decisions, and the trader who masters himself becomes untouchable. Layer 2. The collective market mind. You are not trading against indicators. You are trading against millions of minds reacting to the same information differently. Human analysis reveals three types of traders in every market movement: the believer, the doubter, the latecomer. The believer buys early when fear is still high. The doubter waits, questioning everything. The latecomer arrives after the move is obvious when the trend is almost over. The market rewards the believer. The market confuses the doubter. The market destroys the latecomer. Dow's principle of confirmation is actually a reflection of this. A trend becomes powerful only when the believers and the doubters start moving in the same direction, when the crowd shifts from confusion to clarity, when the emotional majority aligns. That is when trends are born, not because of price, but because of psychology. Human analysis teaches you to detect the emotional shift before the price shift, a skill Dow silently used to read market behavior. Layer 3, the emotional cycles of markets. Markets move in cycles, but those cycles are not economic cycles. They are emotional cycles: hope, optimism, confidence, thrill, euphoria, anxiety, denial, fear, panic, capitulation, depression, accumulation, recovery. A trader who cannot recognize these emotions becomes trapped in them. A trader who can recognize them becomes free of them. Dow understood that the real trend begins at the moment of maximum doubt, when fear clouds judgment, when traders lose trust, when the emotional crowd is blind. That is where smart money accumulates. Human analysis means understanding that opportunity hides inside emotional darkness, not on the news, not on the chart, inside human emotion. Layer 4, the internal trend of a trader's mind. Dow said that markets move in primary, secondary, and minor trends, but human minds also move in psychological trends. Primary trend, your long-term mindset. Secondary trend, your reaction to consecutive wins or losses. Minor trend, your moment-to-moment emotional spikes inside a trade. If your internal trends are unstable, your trading results will also be unstable. A trader with a weak primary mindset will sabotage success. A trader emotionally shaken by losses will change a good strategy. A trader affected by minor mood swings will exit good trades too early. Human analysis helps you stabilize these internal trends. You cannot ride a big trend if your mind is under a small correction. You cannot follow a plan if your emotions are making new highs and new lows every hour. You cannot think clearly if your internal chart is chaotic. Dow mastered external trends. You must master internal trends. Layer 5, the human weaknesses that markets exploit. The market is a perfect machine built to exploit human weakness. It knows how to trigger frustration. It knows how to trigger greed. It knows how to trigger fear. It knows how to shake your confidence. It knows how to make you doubt your strategy. It knows how to make you exit early and enter late. The market has no mercy because it has no emotion. You lose not because the market wants you to lose. You lose because the market does not care whether you win or lose. Only your human weaknesses decide the outcome. Human analysis identifies these weaknesses: impatience, overconfidence, revenge trading, fear of missing out, lack of discipline, rigid expectations, attachment to outcomes, emotional sensitivity to losses. These are not trading problems. These are human problems that appear in trading. Fix the human and the trading automatically improves. Layer 6, the Dow Insight. Most traders ignore Dow never focused on perfect entries or magical indicators. He focused on behavior, patterns, reactions, changes in attitude, shifts in confidence, transitions from chaos to clarity. The market is not a puzzle. The market is a story written by human emotion. And human analysis teaches you to read the story before it becomes obvious. A trend begins when the emotional majority becomes quietly aligned. A trend ends when the emotional majority becomes loudly confident. Confidence marks the end. Uncertainty marks the beginning. This is the paradox Dow understood. This is the essence of human analysis. Layer 7, mastering yourself to master the market. The trader who becomes emotionally stable becomes a different kind of player: unshakable, predictable, calm, focused, detached. He no longer reacts to noise. He no longer fears volatility. He no longer chases entries. He no longer fights his own mind. He transforms. He evolves. He becomes what Dow believed a successful trader must be: a student of human nature, a master of self-control, a survivor of emotional storms. Human analysis is the highest form of trading intelligence. It is the bridge between strategy and success, between knowledge and mastery, between a trader and a legend. Every trader wants to learn indicators, but only a few will learn themselves, and those few will rise above the crowd, because indicators may predict price, but only human analysis predicts behavior. And behavior is the real market, not candles, not patterns, not news. Human beings, human emotions, human psychology. Master humans, master yourself, master the market. This was the secret chapter Charles Dow left between the lines of his writings. Hidden, silent, but powerful enough to define the future editor who dares to look deeper. And now it belongs to you.